Summer's not quite over yet. We're almost there. I want to thank you for your support. Again, I know it's going to take time, but it'd be really helpful if you can subscribe to the channel, hit that subscribe button. Just a few things to share with you today. I want to talk to you about BRICS, not the ones we use to build houses and buildings, but the acronym for countries coming together to take on the U.S., dethrone the United States as the leader of the world. Deliberate effort led by China to take down the U.S. role. China wants to usurp the U.S. as the leader of the world. One of the ways they want to begin to do that is to come together in different trading blocks to stop using the U.S. dollar as a means of transaction on global goods and services, the de-dollarization, what they're talking about. So BRICS is Brazil, Russia, India, China, and South Africa. So the body that they're really trying to take on is the G7. The G7 is made up of the United States, the UK, Italy, Germany, France, Canada, and Japan. Although Russia and China have been part of those G7 meetings now for decades. But that's who they see as their competitor in this BRICS situation. So let's just take a look at some data for BRICS and for the G7. As you can see on your screen, here's the GDP. We have a little bit of an outlier here, don't we? Look at the size of the Chinese economy compared to the other four. This is going to be a source of significant stress and tension for this group. Not to say anything about the geopolitical challenge this group has amongst each other. Russia and China have geopolitical challenges. India and China, of course, Brazil and Russia, South Africa and China, all kinds of existing geopolitical and political tensions are rife between this group of nations. You can see the big outlier here in South Africa, just a tiny little nation when it comes to GDP. And so China will be the dominant player here. And to the extent that BRICS is worried about U.S. imperialism or colonialism, holy cow. This is imperialism on steroids for China. Russia has imperialistic tendencies as well, as does India. So a really telling chart there. When we look at the BRICS in terms of population, of course, we have two standouts, two huge political rivals, geopolitical rivals, economic rivals, military rivals in India and China, dwarfing the size of the other nations. And again, South Africa being amongst the smallest. So from an economics and population perspective, this group doesn't make much sense. Not a lot of commonality. One or two big, strong players against three or four weak players. That's going to set up all kinds of geopolitical problems in the future, political problems, jealousy, envy, cheating. That'll be tough to manage. Now we take a quick look at the G7. We can see GDP in billions here. The US, obviously a big outlier here as well, $23 trillion economy. Next biggest is Japan at about 4.9 trillion. And then we can just quickly take a look at the last piece of that, the population piece for G7, again, led by the US, but very much less disparity here between the smallest nation and the biggest nation. Of course, China and India being big outliers on population. You can see the US is largest here, followed by Canada at the bottom. Now, total GDP for the BRICS is $24.6 trillion. For the G7, almost double, $42.6 trillion, with only a fraction of the population. The population of the BRICS would be 3.2 billion, and the population of the G7, 773 million. So that very relatively small population generates a huge amounts of GDP compared to the very large population that does not. So that gives a little sense of some comparison on size. The other thing we want to pay attention to when it comes to BRICS is what else is going to be happening. And so the original BRICS, Brazil, Russia, India, China, and South Africa, now want to expand. They're going to add the following nations: Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates. Oh my goodness, talk about some trouble. Talk about some geopolitical challenges. Talk about some economic challenges. What China sees here is an opportunity for them to sell more goods and services to all these little economies. This is China's Belt Road Initiative, disguised. But what a group of nations to come together. Ethiopia, one of the poorest nations on the planet. Iran, troubled, sanctioned. Egypt, battling. Saudi Arabia, nothing but oil. Argentina, political mess. So, but if they do let those countries into the BRICS, I don't know what the new acronym will be. It's not going to be BRICS anymore. That group of people will be the largest group of oil producers in the world. They'll have Russia, Saudi Arabia, the United Arab Emirates, and Egypt. And so BRICS, or these nations in this, whatever this new name becomes, because it can't be BRICS, if we add all these other nations, will dominate the world's energy supply. Keeping in mind, still, China dominates the minerals needed for the EV vehicle world, the electric vehicle world. Now, the wide-scale use of the US dollar has been underpinning oil trade, the petrodollar, for members of OPEC, the Organization of Petroleum Exporting Countries. Many commodities, in addition to oil, are settled around the world in dollars. The dollar is the world's reserve currency, and that's why that happens. We have relatively the most stable system in the world. We have the strongest central bank, the strongest treasury, the most powerful government, the most powerful military. As a result of our massive consumption behavior and our presence around the world, there's huge amounts of dollars out overseas. The US dollar is the world's reserve currency. And as a result, much of what's bought and sold in terms of raw materials is priced in dollars. And that can be both a problem for other nations and for the United States. Brazil President Lula da Silva said their addition would mean BRICS would represent 46% of the global population and 37% of world GDP. That is the inclusion of all those other nations I just mentioned. And the de-dollarization is a symbol, could be a potent one, of an effort to move away from the Western-led or US-led global world order. Right? We want a new era. That's going to be uncertain and have lots of fluid multilateral connections. So these nations, these BRICS plus nations, see change in the air, and they think the next 3 decades will be a ascent for them and a decline for the US and the West. Now, BRICS is kind of much draped in bitterness against the US, NATO countries, G7. Think about the role of the Federal Reserve, colonialism, imperialism, sanctions by Western countries on smaller nations. And again, I remind you, China, India, Russia, they have imperialistic tendencies themselves. So kind of funny, the irony is hard to avoid there. The global South, so think of the Southern Hemisphere, has been unhappy with their role in the world, given the power of the US and the Federal Reserve. Many of these countries peg their currency to the US dollar and therefore accept US monetary policy when it comes to changing interest rates. When the Fed hikes rates, it hurts smaller economies because they peg their currencies to the dollar. And so they see the dollar as a powerful weapon used by the United States to gain its interests. And so this seems to be the big focus, not only the economic piece of people trading with each other amongst this group of nations, this new trading bloc, but de-dollarization, weakening the US dollar. Now that's going to be a long time. Most of these countries in this new group are too small to sustain a common currency. The trade between them would not be sufficient. And again, most of that is going to be exports from China, imports into their country. So they're going to have massive trade imbalances as a result of this. Now, the biggest country in this group, of course, China, the renminbi, the yuan, isn't sufficiently convertible. China has very strict restrictions on trading the renminbi or the yuan on global markets because they're afraid of capital flight. So not very convertible, not a very deep capital market, not a lot of transparency, not a very independent central bank. And so the idea that the renminbi leads the way is suspect at best. Not to mention, of course, there's lots of perceptions of unique risk with respect to how Xi Jinping is managing the economy. There's lots of panic about this de-dollarization thing. Don't worry about it from our perspective. Happy days, have at it. Let them trade in their own currencies. While we have benefited in many ways as consumers from the dollar being the reserve currency of the world, and we have benefited by importing cheap goods, we've also put upon ourselves trillion-dollar yearly trade deficits, tens of trillions of dollars of wealth transferred from our shores to foreign shores. The only real concern about de-dollarization is pride, national pride, certainly some control in world affairs, and our ability to inflate our way out of debt, which is to say, let inflation rise so that the real value of our debt falls. But the benefits far outweigh the risks here. And the benefits being a renewed domestic economy, a renewed middle class, a renewed independence from imports. Now, a weaker dollar, which is likely the result if the BRICS plus nations follow through on their plans. A weaker dollar can be inflationary for sure, but it'll also make U.S. exports much less expensive and U.S. imports much more expensive. There's your inflation piece, reversing our massive trillion-dollar yearly trade deficit and returning us towards something smaller, more manageable, and maybe even surpluses. Anyway, quick rundown on the BRICS world, de-dollarization, and what it means for the U.S. Don't worry about de-dollarization. Don't worry about it. All right, just before we go, let's check in on jobs and markets. Yesterday, Friday, the 1st of September, we had the employment situation report released for the month of August, the mother of all data points. Everyone pays attention to it. I'll just run down the numbers real quickly, then go through them a little bit in more detail. Non-farm payrolls, the net creation of new jobs for the month of August, 187,000 versus 170,000 expected, versus 157,000 in July. Good news, although largely made up of part-time jobs and low-paying jobs. The U3 unemployment rate, the narrowest measure, 3.8% versus 3.5% expected and 3.5% in July. So a little tick up there. More and more people entered the labor force here in August, and so that kicked the unemployment rate higher. The U6 rate unemployment rate, the broadest measure, 7.1% versus 6.8% expected and 6.7% in July. Average hourly earnings up 0.2%, a little better than expected, looking for 0.3 versus 0.4% in July. On a year-over-year basis, still very elevated, still a concern for the Fed. Average hourly earnings at 4.3%, expected 4.4%, and in July, the yearly number was 4.4%. Average weekly hours ticked up a tenth to 34.4 hours, looking for 34.3 and 34.3 in July. In August, the labor force participation rate rose by 0.2 percentage points to 62.8% after being flat since March, and the employment population ratio was unchanged over the month at 60.4%. Again, that labor force participation rate ticked up a bit as more people entered the labor force in August. In August, the number of persons not in the labor force who currently want a job, 5.4 million, little change from July. All right, real quickly, let's finish up with markets. S&P 500 stocks opened the week at 4,434, had a low on Monday, the open of 4,434. The high was Friday, 4,532. Closed the week at 4,515, up 81 points. We are now in a situation apparently where bad news is good news. So bad news for the economy means the Fed may not hike rates as expected, and so therefore buy stocks. Silly, bubble. Stocks are way, way overpriced. And again, I'm a seller of rallies and stocks. U.S. Treasuries, the 10-year interest rate, the bond, our benchmark, opened the week at 4.19%, had a high on Tuesday at 4.23%, a low on Friday at 4.06%, and closed the week at 4.18%, down about 1 basis point. Most of that volatility came on Friday in response to the non-farm payroll number. West Texas Intermediate oil on NYMEX opened the week at $80.07 for a barrel of oil. The low was on Monday at $79.70. Had a high at the close on Friday at $86.05, up $5.98 on the week. Foreign exchange, checking with the U.S. dollar index, our proxy for the strength of the U.S. dollar, opened the week at 104.19. Had a high Tuesday of 104.26. Low was on Wednesday at 103.08. Close on Friday at 104.26, up 7 basis points. Higher stocks on the week, lower interest rates on the week. Doesn't make sense. Higher oil again and stronger U.S. dollar. Correlations are not very strong amongst our asset classes for some time now. All right, that's all I have for you today. I'm Frank. Always try to buy American.